Gold prices are likely to increase if tensions between India and Pakistan escalate into war, based on historical patterns and current market dynamics. Gold is a safe haven asset, and geopolitical instability, especially between two nuclear-armed nations like India and Pakistan, tends to drive demand as investors seek security. For example, during the Gulf War, gold prices rose by about 12%, and the Russia-Ukraine conflict in 2022 saw an 8% increase. India and Pakistan are significant gold consumers, with India being one of the world's largest buyers, particularly for jewelry. A war would likely spike local demand in both countries, further pushing global prices. Recent tensions, such as the April 2025 Pahalgam attack and India's missile strikes on Pakistan, have already led to gold price surges, with reports of a 3.5% rise to $3,443 per ounce on May 7, 2025. However, the extent of the increase depends on the conflict's scale. A limited skirmish might cause a modest 5 to 10% rise, while a full-scale war, especially with nuclear risks, could drive prices higher, potentially exceeding historical peaks. Other factors, like a weakening Indian rupee or global market reactions, could amplify this. For instance, a weaker rupee makes gold imports costlier in India, supporting higher domestic prices. That said, if tensions de-escalate quickly or other safe haven assets like the Swiss franc gain traction, the price surge could be tempered. Recent posts suggest some market skepticism, noting gold sell-offs despite rising India-Pakistan tensions, possibly due to US-China trade talks. In summary, a war would likely push gold prices up potentially significantly, but the exact outcome hinges on the conflict's intensity and global economic responses. Always consider the broader context. Gold's trajectory isn't guaranteed.